Download our complimentary guidebooks, checklists, and other useful financial resources at savantwealth.com/guides.
Thank you for joining us today for our Savant live webinar. We're really excited to be discussing the financial considerations for relocating to a warmer climate. My name is Justin Smith. I'm a financial advisor in Savant's Phoenix office. I've been in the financial services industry for about 20 years, and this is one of my absolute favorite topics to discuss. Joining me today is Ann Mank. She's Savant's Director of Financial Planning. Welcome, Ann.
Thanks, Justin. I'm very excited to talk about this topic as well. Being in the financial industry for probably about 20 years now as well, this is definitely something on my bucket list. And so every time we do this seminar, I even learn something new. So happy to get started here.
Yeah, absolutely. Looking forward to it. I hope the weather's okay up there, up north. I'm down here in Phoenix, Arizona. I will tell you that it's beautiful down here right now in the springtime. Got spring training baseball. It's fantastic. Got a lot of people from up north thinking about coming down here. And I'm really excited to explore this topic because moving to a better climate is something, again, we see a lot. And it's something I've actually done myself. For most of my life, I lived in the Midwest. But a few years ago, my family and I decided that it was time to move south. So this is actually a picture of my kids from a couple of years ago. We have more now since then, but this is them trick-or-treating in the snow about a week before we sold our house in Chicago and moved to Phoenix, Arizona. So I know firsthand the satisfaction that comes from selling your snowblower and moving to a warmer climate. But I'll tell you, it wasn't easy, and there's a lot of planning that went into it. And if you are thinking about making a move, you're going to need a plan. So we're going to walk through our 7-step relocation plan today. As I mentioned up front, I'm joined by my colleague, Ann Mank. She's going to be kicking things off with our first planning consideration, which is the location.
Yeah, we've all heard location, location, location. And that's especially true as you're thinking about moving to a warmer climate. So what we're going to start with first is, where do you want to go? So that is, as we're talking about going to a warmer climate, it really makes a difference because each state really has their own personality. So as you start dreaming about going to a warmer climate, it's important to know, okay, what part of the United States do I want to be in? Is it Texas? Is it Florida? Is it Arizona? Being from Wisconsin myself, Florida seems to be a very common state for most individuals to go to, but this is really the first place to start. Where do I want to go? Where will I be happy? And then that helps you hone in on your planning, both financial and from a personal perspective, once you know what that state is. Then next, we're going to look at, where are people going? And I know this is kind of hard to read, but yellow says, people are coming out of that state, and blue means that people are going to that state. And so in Illinois, you can see that it's yellow. That's where we're headquartered. And you can see that, and a lot of times I hear this too of, okay, I've been here long enough. I want some warm weather, just like Justin did, and I want to go somewhere warm, which would be those blue states. So I thought it'd be fun if we do a poll now that we've kind of got your, creative juices flowing, doing a poll of, where do I want to go? And so you'll see that pop up. There's a couple of locations on there for you to decide, but we're interested to see, okay, what state is everyone kind of thinking about? And I can see the poll results going here, and it's the ones I would suspect, but I'll wait till everyone is in before we kind of show the results to everyone.
And I will warn you, I'm going to be personally offended if Arizona doesn't bump up in the ranks right now. I can see it. All right, we've got just about everyone has answered. We'll give it another couple seconds.
All right, I think that looks good. There we go. So as you can see, is Florida, but it's kind of interesting with this group that it's North or South Carolina. And as we can see from this chart that we have up here, that's kind of showing that as well, that North Carolina and South Carolina are one of the top 10, and South Carolina is actually number 1 on this chart. So this makes a lot of sense. But of course, Florida is up there. Unfortunately, Nevada is, maybe 3rd or 4th place, but it's still up there as well. So next, we will hop to, so this is kind of the fun part. Now we're start talking about some of the details on this, and then I'll pass it over to Justin for the next section.
Yeah, so now once we've decided where we might want to go, the next big question we have to ask ourselves is, what can I afford? What's housing going to look like? Because housing is going to be probably the biggest driver here, and there's a lot to unpack on this part. How we analyze this is going to depend on also whether you're planning a full relocation or perhaps you're pursuing that dual home, dual location lifestyle. So when you're looking at a new home in that preferred location, there's going to be some upfront outlays, either for a down payment or an outright purchase. Plus, you might have ongoing mortgage payments, taxes, insurance, maintenance, etc. You'll really need to get a good handle on what those costs are going to be, and then start to model out those expenses, see how they're going to impact your overall financial plan. There might be trade-offs that need to be made in order to make it all work. From my experience, there's always many different scenarios to look at. We want to be sure to test them all too. We can be thinking about, should I pay all cash? Should I take a mortgage? Do I need to sell first, then buy? Do I want to hold 2 properties for some period of time? And then when do I start making these moves? Do I do it before retirement, after retirement? Maybe I hold 2 for a couple of years and sell 1 later to fund retirement. These are all big what ifs we need to solve for. Ultimately, you want to understand how this is going to impact your cash flow, taxes, nest egg, and your overall financial life. And one question I hear a lot is, should I pay cash or should I take a mortgage? And like most financial planning questions, the answer is it depends. It depends on what mortgage rates are like, the terms, your investment opportunity costs, and also the cost to potentially create cash for a purchase. If you are going to use a mortgage, it's important to know that things might be different with this mortgage. If this is a second home or your non-primary property, the rates and down payment requirements are probably going to be higher. There might also be different mortgage structures that suit you well here. Maybe we don't look at the 30-year fixed. If you know you're only going to plan to carry these 2 homes or 2 mortgages for a smaller number of years, you might want to think about variable rate mortgages, adjustable rate mortgages, or interest-only loans. Those could help ease the overall cash flow burden of multiple mortgages. And there are other ways to finance this purchase aside from that traditional mortgage as well. Perhaps you own your primary residence free and clear. You might be best suited to take a home equity line or cash out refinance from that primary home to pay for the second home. Another option, if you have a sizable balance of after-tax investments in a brokerage account, you could explore using a margin loan or a pledged asset loan to cover the purchase. That's a great option for shorter-term bridge financing. You can access some of those funds without potentially having to sell the underlying assets and incur potential capital gains. So now that we've talked briefly about the purchase side of things, a lot of folks are thinking about, maybe I'm going to rent this new second home. So Anne, do you want to start talking about the rental considerations?
Absolutely. And a lot of times when we're talking about the rental considerations, there's a couple of things that we want to make sure that we think about. So one of them, and if you can go to the next slide, would be cash flow. Really, what is your cash flow? What does that look like? Do you have the cash needed in order to maybe put down a down payment on a home? Is there a bit of a timing issue between when you're selling your first home and buying a second home? Also, I like to think of these rental considerations in a couple of different ways. Will you rent your primary home and buy a home in Florida? Will you rent in both places? Will you rent when you come back to the colder climate and, buy the home in the warmer climate? So really, what does your cash flow look like? Are you able to do those different scenarios? Which one works best? Then there's also the ROI, which is just return on investment. So if you're going to buy a property, will there be a return on your investment? So for example, if you only plan on living there for maybe a year or two, you might not be able to get the money or the investment back on the house you just purchased. So maybe renting makes a lot of sense. Also, from an income tax perspective, when you're owning a home, you might be able to deduct a few things off of your tax return. When you're renting, you might lose those deductions. So it comes from, there's a lot of different aspects when you're thinking about this. And there's also just what is your personality? Like if you have a home in another location and you have a home back in your original locations, who's going to mow the lawn? Who's going to shovel the snow when you have a snowstorm in the middle of March, like we're about to have in Wisconsin here? So where is the maintenance going to come from and who is going to do that? So that's another reason why you might want to rent versus own a home in your new location. And then there's this fun little rule called the Augusta rule. This was named Augusta because of where it was located, so Augusta, Georgia. And as many of you might know, the Masters are played there. So individuals that lived in that location, they wanted to rent their home out for the 1 or 2 week period during that Masters. And so they were able to put in an exemption on the income that they received during that time. And it is not just for Augusta, it's for all of the United States. So for example, if you want to rent your home for less than 15 days, you can do that and you do not have to declare the income on your tax return. So it's a nice, if you only want to do it for a day or two, here's a nice way of maybe earning a little bit of money on the property that you have. The next section that we're going to talk about, and Justin's going to take that, is really what is your timeline? What's the time frame? What does this look like? Because we've talked a lot about high level, but now how do we actually put that in place?
Yeah, so we've figured out some of the mechanics and some of the big moving pieces. Now we need to start coordinating it on a timeline. And there's a lot of moving parts here. We've got the purchase, financing, sale, the move, retirement. They all have unique planning considerations, and everyone's situation is unique. So there isn't a magic formula about how to do this. But I can say working through this process with an advisor can really help you clearly map out that timeline and execute on the big items along the way. A lot of highly impactful, critical decisions you need to make with a lot of tax implications as well. And one of those things that's related to your timeline that we often overlook is when to sell that primary residence or your former primary residence and what tax impacts that can have. If you are planning on selling your primary residence at some point in this timeline, you should be strategizing how you can use the capital gain exclusion on your primary home. That capital gain exclusion is up to $500,000 for a married couple or $250,000 for a single individual. So that means fully capturing the exclusion could save you as much as $100,000 in saved taxes. So absolutely massive planning consideration you need to think about. To ensure that you're qualified for this, you need to have owned the home and used it as your primary residence in 24 of the last 60 months. So effectively, there's this rolling 5-year window, and you need to have the home to be your primary home in 2 of those 5 years to qualify. So I'll give you an example of how this can go wrong. Let's say you've lived in Illinois for decades and you buy a house in Arizona at age 55. You plan to make Arizona your full-time residence and sell Illinois at 60. Then again, life happens, or maybe you just realize Arizona is a lot better than Illinois, like I did, and you become a full-time Arizona resident shortly after moving down there. Once you change your primary residence, the clock is ticking and the window is closing for you to capture that capital gain exclusion on the Illinois home. If it was this simple, just kind of one-time move, you'd essentially have 3 years after Illinois stopped being your primary to fully capitalize on the exclusion. So let's say you waited to sell until 60. You would look back at that rolling 5-year window, and you might see that only 12 of the trailing 60 months qualified with Illinois as your primary residence. So your exclusion would be cut in half. If you waited longer till 61, the exclusion would disappear completely. And again, that could mean as much as $100,000 in additional unnecessary taxes potentially on the sale. So really important element to be thinking about as you're syncing up that timeline, moving all these chess pieces on the board. And that's a great segue for Ann to talk about the state income and estate tax ramifications here, because all 50 states treat things a little bit differently.
Yep, exactly. And who would have thought that talking taxes would be this much fun? But I think it's a lot of fun because what it does is it makes sure that you're using that money that you worked very hard for, that you're using it in the most efficient manner as possible. And I also just want to remind everyone that the Q&A is open. So we're going through a lot of information. So feel free to put those questions in the box as we kind of go through, and we'll answer them as much as we can at the end. So let's look at the first kind of state impact here of taxes, and that would be with Social Security. So if you knew or you didn't know, this might be your little nugget for the day, but there are some states that will tax your Social Security benefit, and there are some states that will not. And so if we are looking at this graph in particular, what you want to do is pay attention to the ones that are dark blue or gray, because either that means the state does not have any income tax or it does not tax your Social Security benefit. So that means when you complete your tax return and you put your Social Security benefit amount on there, you won't have to pay any taxes. But the ones that are pink on this or with light blue, those are the ones that you might be surprised in. So for example, if you would move from Illinois to Colorado, you might be surprised when you retire and all of a sudden now your Social Security benefits are being taxed. So pay attention to that. And with all of these slides, these are just things to keep in the back of your mind, but you would really want to work with your tax professional and your financial advisor to make sure that these are considerations as you're moving along, to make sure that you're being efficient with your money, as well as finding a place that you're happy. The next slide that we're going to look at talks about what are those income rates for those individual states. So this is the top income tax bracket for each of these states. And you can see that they are really across the board from having absolutely no income tax. So you can see in Florida, that is another reason why most Wisconsin people move down to Florida, I can guess, because there's no income tax. It's also sunny as well, so that might help. But the gray ones, there's no tax at all. And then you go from yellow to red. And as you get more into the red states, you'll see that we have a much higher income tax impact. So when you're looking at this, you know, one thing you might want to talk to your advisor, let's say you live in Minnesota, which as you can see is pretty red. It's almost a 10% bracket. It might be a really good financial decision for you to move just from the fact that you won't have taxes on your income. But those are all things that go into this formula and shouldn't be your primary driver. The next thing we're going to look at is the estate and inheritance tax. So as you can see, a lot of this is gray. That just means that there is not an estate or inheritance tax that is taken on the state level. Still federal, you know, there's still federal rules that you have to follow, but you can see that some of these states, depending on what it is, will tax it in a different way. And they have different thresholds as well. So I know this is kind of small and hard to see, but for example, if I'm looking at Illinois, they have what's called an estate tax. So if you pass away with a certain amount of assets over a certain threshold, and right here, it is saying 4 million. I'm pretty sure that's it. I don't want to, I can't see right now without my glasses. I'm at that age. Thank you. So if it's over 4 million, you're going to have taxes that you're going to have to pay on it. But if you're in Wisconsin, which is right across the border, you might not have to pay taxes on that because they don't tax a state. So once again, this could be a huge tax impact to you, and it's something you should consider as you're moving from one state to another. And next, we'll be talking about titling and the estate plan. So once again, it was just a very nice transition on going from estate taxes to what is your estate plan.
Thanks, Ann. Yeah, so once we kind of start to bring things into focus and we know what that next chapter is going to start looking like, we need to plan how it's going to coordinate in with the rest of your balance sheet. Specifically, how you might hold that new asset if you're buying a new home, and how it's going to interact with the rest of your plan. So the first thing to think about here is how we're going to be using this property. That might dictate how you want to title it. Second homes are used in a variety of different ways. You might have full-time or part-time personal use. You might use it as a part-time rental or a full-time rental. Each of those usage patterns will bring up a variety of planning considerations for your insurance, your taxes, and the financing you might use. It's also going to play into how you should title it. You can hold these properties individually, you can hold them jointly, you can hold them in trust, you might want to hold them in an LLC. If there's going to be rental activity, the LLC is often the best way to treat a rental like a real business and potentially insulate yourself from liability. So you'll want to be sure that you're coordinating your new home into your estate plan as well. This can be done by titling the home. Often we see this in the name of your trust. If it's going to be a personal residence, naming it into the name of your trust can be very helpful. And as Ann discussed, some states have an estate tax. So you'll want to be thinking about that potential estate tax ramifications if you hold any property located in a state that has one of those estate taxes. So those highlighted states from the last slide, if you're owning property there, that really needs to be woven into your plan. If you've got the lake house in Minnesota, which has an estate tax, but you've moved to Florida, you still need to plan around that. Minnesota is still going to have estate tax implications because you own real property there. You need to coordinate that into your plan. There can also be some interesting opportunities here for multi-generational wealth transfer. If you have a property you'd like to pass on to future generations, again, going back to that family lake house, there might be some advanced strategies you can use here. Most notably, there's one called the Qualified Personal Residence Trust, QPERT for short. That's a way to pass a home down to the next generation with a reduced estate and transfer tax burden. So you'll get to enjoy the property in the meantime, but it can reduce that potential estate and gift tax burden that you might otherwise be subject to. So if you're in that realm where federal and state estate taxes are in play, you'll be wanting to be thinking about this multi-generational wealth transfer as well. And then lastly, I want to touch on something that's also important here when we're thinking about title is community property. There are 9 states highlighted here that have a unique form of joint ownership called community property. So this can come with some beneficial tax treatment for something we call the double cost basis step up. And it can also complicate things if you have blended families or second marriages. So if you are moving from a yellow state to a blue state here, it's going to be your first time in a community property state. You need to be aware of that and be planning ahead. But as we are highlighting here, there is this big opportunity for people moving to community property states to get this double cost basis step up. Essentially, how that works is if you are properly titling your assets in community property at both the first spouse's death and the second spouse's death, the capital gains that are otherwise embedded in your stock portfolio or in your real estate get wiped away. So it can be a tremendous benefit for the surviving spouse from a tax perspective and for your heirs as well. We want to take advantage of that if it suits us. So, Ann, now that we've kind of talked about a lot of the dynamics, one of the last things we need to think about is establishing domicile, right? We've saw there's different opportunities, different reasons why we might want to say, I'm a resident in this state, not in this state. It all ties back to this concept of domicile. Can you walk us through that?
Absolutely. So, and this is just a fancy way of saying, okay, where do I really live? Where do I really reside? And so when you're thinking about domicile, there's a couple of questions that you want to make sure that you can answer to make sure that you're establishing it. So the first one, like, what is it? It is just a way of signifying to the government, the IRS. That's really why we want to be doing this, is for a state and IRS perspective, like, where are we sitting? Like, what rules, what state rules will govern us? What taxes do we have to pay? And so the way this is determined, each state has certain qualifiers that says once an individual hits this, we will declare them as a resident. So for example, in Florida, you need to live there for 6 months and 1 day. So they just want to make sure that you are there for most of the time. And how do you do this? Because that's the biggest question that's out there, is like, how do I make sure that I have proven that I am a resident of this state? And it would be all the things you typically do. Like if you imagined, when you moved out of your parents' home and you were off on your own for the first time, what were some of the things that you did? You changed your address on your driver's license. You might have registered your car. You signed up to vote in the area that you now live. You filed your taxes with this new address. By doing all of those, you're signifying that, yes, I am here. Another way of doing that is having your bank account with the new address on it, having your utilities, whether it's your primary home or a secondary home, but having all of those utility bills go to the same address. Some states actually require you to declare it. So you would have to fill out the application for that state and say, yes, this is the one that I'm declaring is the state that I am a primary resident of. So make sure you keep all that paperwork. Make sure that when you're going to this new state, that you are reaching out to the State Department saying, okay, what do I need to do to make sure that I'm a resident of this state? Because what might happen is, let's say you move from a state, and I'm just going to pick on Minnesota. Not that Minnesota is wrong, I just kind of know that history a little bit better, but they have a really high income tax from a state perspective. And so they want to make sure they have as many residents as possible. So when somebody moves from their state, they pay particular attention to make sure that that person really is in that state. So let's say you go from Minnesota to Florida, they might just double check or perform an audit to make sure that you really have moved down to Florida for the majority of the time. So it's not just from the perspective of the state you're going to, it also is from the perspective of the state that you're leaving. And when you do establish domicile in a state, what that's saying is that they now have the right to tax you like a citizen of that state. And they would be able to, income tax if it's that, property tax if you own property there. So that's really the purpose of establishing that, is to say, okay, who from a tax perspective do I need to pay? But it does go both ways. So just be careful of that. So we talked about a lot of different things, but we're going to also give you some bonus tips now. So Justin is going to go ahead and just give you a few more nuggets to think about.
Thanks, Ann. Yeah, there's obviously more than just 7 steps to making this move, right? We wanted to do the big highlights, but there's a couple things in the financial planning realm that I think are really important to point out in a quick lightning round fashion. So if you are 65 or older, you'll need to think through how your new lifestyle is going to work with your Medicare benefits. If you're planning that multi-state lifestyle, a Medicare supplement plan typically works best compared to a Medicare Advantage plan. Those Advantage plans typically have limited local networks that do not cross state lines. So be thinking about your Medicare as it relates to that. It's also important to manage the physical and digital copies of critical documents like your tax return, your estate planning documents, your powers of attorney, etc. We recommend storing copies in a secure digital vault, and then also having a physical file you can take with you. And then finally, it's important to establish a new network of trusted professionals. Reach out to family, friends, and current trusted professionals to begin creating that new network. This will likely include estate planning attorneys, CPAs, insurance agents, realtors, mortgage brokers, etc. The good news is that my fellow advisors and I here at Savant have extensive professional networks across the entire country. So please reach out if there's a need. And remember that Savant works with clients in all 50 states. So your Savant advisor can continue working with you no matter where you go. So let's go back and just quickly summarize our 7-step relocation plan. First, we want to be thinking about the location. After we've got our hands around that, let's think about our purchase and financing options if we're going to be buying a second home. Third, we want to be thinking about rental considerations. Both, do we want to rent down there? And if we buy property, do we want to rent out that property? There's a lot to unpack there. After we've thought through those pieces, we want to start talking about how do we sync up and coordinate this timeline? Again, when are we buying the second house? Are we selling one first? When does retirement fit into this window? There's a lot of chess pieces. We got to sync them up properly. Then we have our state income and estate taxes. Obviously, that's a consideration, and it's going to feed into our financial plan. Potentially, there's tax savings that we're going to reap that we want to incorporate into our new plan. And then as you're purchasing that new property or making the move, you want to be thinking about properly titling that and updating your estate plan. And then finally, our last piece is establishing domicile. Again, cementing that this is my new home, and you're also severing domicile with your old home. It's an important step to go through. So we're going to now open up for your questions. I see we have a bunch in the queue already, but we do have hundreds of people on the call today, so we're not going to have time to address everyone's questions live. If you'd like to discuss your unique situation, please schedule a complimentary 15-minute call by clicking the link in the chat. So we're going to take a quick look here at the
Yep. And Justin,
questions.
I can give you one right away. Perfect. That kind of is a common theme in those questions. It's just,
sounds good.
This is a lot that's kind of going on. Like, when should somebody start this? Like, that's what some of the questions, like, when do I start this? 6 months, a year? When's the best time? And then, like, how do you just go about starting?
Yeah, and there's, again, that timeline is so complex and there's so many moving pieces. I think giving yourself at least a year is probably the best idea. Trying to execute this in 3 months or 6 months, that's going to be tough. Again, and I know you want to get away from the snowstorm that's coming right now. You're going to have to wait till maybe next year's snowstorms if you actually want to make this a reality, right? So give yourself that time. And one thing we didn't talk about in the location part is really spend some time down there. I've seen some folks, they took a 7-day vacation to some location. They loved it and said, we're going to retire there. But vacation life and real life are different, right? Actually invest some time to go down there, spend some time. Don't just stay at a resort, stay in the neighborhoods and spend your time across all parts of town. Really get acclimated to make a smart decision about, hey, this is where we want to spend the next chapter of our life. Because in reality, if you're going to be selling a home, moving, buying a new home, there's tremendous costs involved with that. You're making a huge investment when you pick location A versus location B. You want to be really confident in that. And that goes back to, again, how much time should you give yourself? At least a year. But if you have multiple years, even better. More time to go scout out different areas. Even if you know, hey, it's Florida. Florida's a big state. You got Atlantic side, Gulf side, north, south, central. There's a lot to unpack there. So give yourself some time so you can make a confident and informed decision.
And just out of my own curiosity, like, when you decided to move to Arizona to when you actually got to Arizona, like, how long were you planning for? I mean, I know you know a lot of this stuff, so it might be a little bit quicker, but how long do you think it took you to go from an idea to actually being out there?
It was probably a 2-year process. The first year was thinking about professional things, and then it was listing the house and building a house down here in Arizona. There's a lot of moving pieces there. And then, of course, it all comes to crunch time. If you were trying to, like we were, to not have 2 mortgages at the same time, that is a very, very delicate dance that can get very complicated and very stressful very quickly. But yeah, we probably gave it at least 2 years of really vetting it out. And we did the same thing. We kicked the tires on a lot of different locations and a lot of different neighborhoods because, again, we knew that once we landed, we weren't going to want to pick up and move again 2 years later. Mm-hmm. This is kind of related, Ann. I'm seeing questions about, can you touch on some of the non-financial items that should be explored here?
Yep. And this is, it definitely is a lot of what you were talking about before. I remember I knew somebody who they retired and their son lived out in New York. So they were super excited to go out there and, sold their home, went out there, they'll be near grandkids. And within 2 years, they were back in Wisconsin. And the reason for that is kind of what you're saying. They didn't kick the tires. They went all in. They would go out there, but only for maybe 1 or 2 weeks. They never really paid attention to what the neighborhoods would be like. Like, there's a big difference between living in rural Wisconsin and living downtown New York, like worlds apart, and they just were not ready for it. So some of the considerations that you should look at might be like, are you a person who likes quiet, or are you a person who wants to go to the theater? Are you a person who likes to walk a lot and want to be able to walk to everything you do? Or do you not mind taking an evening car ride somewhere to get to Target or whatever you need? So it's, what is your lifestyle like, and how do we best fit that on where you're going? How do you like to move about? Are you active, or do you tend to be more on the like slow paced side of things? The other thing is, when you do move somewhere, is the plan for you to go to your family all the time, or is it for your family to come down by you? Because I think a lot of times individuals move and they don't think about that. They just assume, oh, I live somewhere warm, the grandkids will come to me all the time and I'll see them, I'll make this great place for them and they'll all want to come down. Well, if it's like my family, like we have travel sports and we're never at home on the weekends, and there's not a possibility of taking, maybe a week or two off because we have school and sports and a ton of activities. So really, like, where and how are you going to see your family, and is that okay? Some other things you might want to think about is, like you were saying, it's just the neighborhoods. Maybe that's where renting comes in. Like we talked about, what are some of the rental considerations? Go rent. I mean, with Airbnb now, it's so easy to go into a neighborhood and just maybe rent it for a month or two and just try it out, kick the tires, see if that works. It would be great if you could, like, let's say you want to go to Florida, maybe you rent a home in Florida in different locations for 2 months at a time. So in a 12-month time period, you get the adventure of seeing all these different parts of Florida, but then it would give you a really good idea of, is Florida the climate for me? Is it the location for me? Is my family okay with me being down here? And then really what fits my lifestyle the best? So even though we're talking about the financial side of things, usually it's more of the non-financial things that help us make that ultimate decision, because that's really what matters most.
Yeah, and I can tell you, experiencing all 12 months in a new location, if you're going to spend all your time there, is really important. Florida obviously gets very sticky. Arizona obviously is very hot in the summertime. I grew up in Minnesota, so I am a northern guy, and I was a little freaked out that how am I going to deal with these summer temperatures? But happy to report, no looking back, much better to deal with 110 than minus 10. So other
That's what
questions?
I would
Yeah.
think as well. I saw another question in here, and it's kind of a complicated question. But what about moving abroad? Sometimes we hear, clients, I want to move to Portugal, I want to move down to Mexico. What advice would you give for them in particular?
Yeah, and that gets into a very hyper personalized, complex conversation. It's going to depend on what's your citizenship status? Which specific country are we talking about? Are there specific programs you're looking to plug into? So, not something we can cover on this call today, but that's absolutely the type of thing you should connect with a Savant advisor to talk about. Because again, there are just so many more layers when we're talking about going beyond the US borders. So really important to have multiple conversations with professional advisors on that front. And a lot of what we're seeing in the chat is going back to that domicile idea, right? And this is another one of those things that there is no cookie cutter answer here. There wouldn't be dozens and dozens and dozens of court cases against taxpayers if this was a simple file the form that says I'm in Florida now. It's always what is generally called a facts and circumstances test, meaning both states get to decide based on your individual facts and your individual circumstances, are you resident here or are you a resident there? There's a lot of famous cases with professional athletes and celebrities that maybe split time between a high tax state like California and New York and try to establish their domicile in Texas or Florida. They come up with very creative ways to try to tie you back to those high tax states. So again, it's not as simple as 6 months, one day, check the box, I'm done. You need to be more careful with that. And again, it's another thing that there is no cookie cutter blanket advice there. talk to your professional advisors, talk to a Savant advisor, talk to your CPA, talk to your estate planning attorneys, and make sure that you really have a concrete foundation on that. Because there are so many different layers there that it's not something you want to just breeze past from a planning standpoint. It really deserves and needs a much more in-depth analysis.
Yeah, and part of that too is, the more legal documents you can have pointing towards your primary residency, the better it is. So that's, like I mentioned before, driver's license, registering your car, doing your IRS, your tax returns. But the more things pointed in one direction, the easier it will be for you to establish that domicile.
Exactly. Going back to one of those famous court cases, I remember there was an Illinois, Florida one, and it was a business owner who had a business in Illinois. They were spending more time in Florida. It was in that gray area. Was it 5 months? Was it 7 months? They didn't have great documentation. They didn't check, they didn't do all of the just kind of fundamental planning pieces. Illinois obviously said, hey, you're an Illinois resident. You owe Illinois taxes. It was a large sum. One of the fact patterns in that case was their dog lived full-time in Illinois. So that's how granular and how personalized this can get. It's not cookie cutter. The state of Illinois said, Illinois is your home because that's where your dog calls home. It can be that unique. So again, stressing how important it is to have a personalized plan and think through all this with professionals. It is absolutely not as easy or as simple as 6 months in a day.
Yeah. Well, I think that was the majority of questions. If there's anything that we've missed or needs a more specific answer, we will definitely make sure that that question gets answered for you.
Yeah, absolutely. Again, the Savant team would welcome the chance to connect with you. These are complex, highly personal questions. Do yourself a favor, talk to a Savant advisor, talk to your other trusted professionals to really make sure you're on sound footing here. This might be one of the bigger financial moves you make in your lifetime. It deserves really thoughtful planning. So go ahead and use that link to schedule a call to get started. I know we have some clients on the line as well. Go ahead, please reach out to your Savant advisor to talk about this. Again, talk about all the different planning considerations that are at play here. Hope to see more of you guys in the future joining me on the sunny side down here, whether it's Arizona, Texas, Florida. The weather's great. Come on in. And for everyone at Savant, thank you so much for coming out today. We'll see you next time. Thank you.
Thanks.
If you enjoyed this webinar, visit savantwealth.com/guides and download our complimentary guidebooks, checklists, and other useful financial resources.